Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on the monthly chart, starting with the most bullish scenario where we're looking for multiple 1-2s, where each next 1-2 is of a lower degree, currently working on the blue wave 1, then another blue 2 and continuation to the upside. If we want to get a little bit of an idea of when this blue wave 1 might top out compared to previous bull markets, we can use fib time. If we compare the yellow bull market here to the red bull market, then you can see that the yellow bull market was a little bit shorter in time. If you take a fib time from the start to the end of the red wave 1, you can see that this one ended just before the 0.786, so it was a bit shorter in time. If we, however, compare the green and latest, arguably, bull market that is finished at least to the yellow bull market, you can see the all-time high was made exactly on the 1-to-1 fib time, taken from the low to the high to the low over here, comparing yellow with green. Now, keeping this in mind, the 786 and the 1-to-1, I used the same fib times in blue over here, taken from the start to the end of the green 1 to the end of the green wave 2, the latest bear market. In this case, we then get a target for this wave 1 time-wise between March 2025 and October 2025. So that's an area of interest from a time perspective. Now we can do the same, but this time for price. So we use the previous bull markets to get a better idea of what the price target is for your blue wave 1. If we look at the chart, then you can see that the two bull markets ended right around the 0.618 trend-based fib extension. For yellow, the trend-based fib extension is taken from the start of Bitcoin to the high of 1 to the low of 2, and for the green one here, taken from the low to the high to the low. And you can see that here we just missed out on hitting the 618. Here we actually hit it, so arguably here the 618, of course, is an important target on the chart. And I used the 786 as well as a little bit of flexibility, giving you a target between 104k and 177k for the blue wave 1, and then of course time-wise preferably reaching this in 2025 between March and October. After wave 1 is finished, we are looking for another bear market in this wave 2, and what you can see is that each wave 2 so far has retraced to a deeper Fibonacci level. We started with the 0.236 and the 382 was not reached. Here we had the 382 taken from the low to the high of the yellow bull market. Here we pretty much hit the 0.5. So if we then take a fib from the low of the green 2 to the estimated high here of wave 1, you can see that the blue wave 2 target area is ranging pretty much between, let's say, 40, 30k all the way up to, let's say, 55 to 30k, right? Looking at the 0.5 and the 0.618, and I just put the 618 on my chart because of course we are moving deeper and deeper with each bear market at the moment, right? So it gives a little bit of an idea of what to expect. Now, a bullish scenario, but it will eventually be more bearish as we do expect a bigger, larger sideways bear market afterwards, is what you see on the chart here. So we have a wave 1, 2, 3, 4, and then an extended fifth wave structure, 1, 2, 3, 4, 5 wave move, where wave 3 is extended, as you can see, reaching the 1.618 to the 2 trend-based fib extension, taken from the low to the high of 1 to the low of 2, which is good. Wave 4 hit the 0.5, which is a target for a wave 4, no overlap with wave 1. And then we're looking for a wave 5, 1, 2, 3, 4, a 5 wave structure, where the target area for your wave 5 is between 68.8k and 174k. And 174k target area is quite interesting because from a price perspective, I just mentioned that with the other scenario, we have 104 to 177k, which of course has overlap with the target area you have on the chart over here. So that is quite interesting. Of course, we already hit this area, but for a wave 5, you are looking for a final 5-wave structure to the upside. So we at least want to see 1, 2, 3, 4, and at a bare minimum, one more high towards the upside. What is interesting is the volume on the higher time frames. The volume cannot always as clearly be used as on lower time frames, but I at least want to show you that we have made a higher high on price, but you can see that the volume is moving towards the downside. Same is true on the index chart as well, and that is something that you do like to see in a wave of 5, where you have an impulse 1, 2, 3, 4, 5, and you create a new high, but you create a new high on a lower amount of volume. And at the moment, that is true. Now, the most bearish scenario is that we have a finished impulse to the upside, 1, 2, 3, 4, 5 wave structure. The 1.618 is a common target for wave 5, taken from the high to the low of 4 with the normal Fibonacci tool. And then you're looking for a bigger bear market, a 3-wave structure ABC. Now, in this case, preferably, you are going to be looking for a regular flat A, B, preferably finished, and a C to the downside, creating a 3-wave structure over here. And then you look for an impulse to the downside. It does have the lowest probabilities, as covered in the daily content many times when covering the weekly and the daily scenarios, right? But by all means, it is at least something we got to keep in mind. As an Elliott wave analyst, you always need bullish and bearish scenarios. But here we're then looking for a move down, where the maximum target really would be the 0.236 at 6K, taken from the low to the high, just like we had over here. We didn't touch the 382. The 0.236 was the maximum target. So on these very high time frames, even though generally the common target for a wave 2 is the 05786, doesn't really work the same way when you move towards a monthly time frame. So this would really be like a maximum target. You do preferably want to end the wave 2 after the 382 fib time, sitting on September 2025. But then again, it does have the lowest probability. So if you then look at the probabilities, then at the moment, the highest probabilities would be for the multi 1-2, which is the first scenario that I've shown. And also on par, the wave of 5 that we're looking for here. Now, the main difference between the two is that after this wave 1, you expect a relatively short bear market in 2, and then continuation to the upside, where you don't want to see price move below 15K. And in this scenario here, where you finish a wave 5, you expect a longer sideways bear market, right? So an extended bear market, a much bigger range to form, after which we then move towards the upside, potentially a deeper structure as well. But we'll have to first wait and see till the high is for the high to be in, because we need to have a 5-wave structure, and the probabilities also in the daily content are at the moment higher to still look for at least one more high. So that also, you know, adds probabilities to putting the bull markets, or the bullish scenarios I should say, on the number 1 spot here. And then on the second spot, the lower probability scenario is the bearish scenario, where you have a finished one and you already look for a wave 2 towards the downside here, with the all-time high being in a finito 3-wave structure, move towards the downside, currently the lower probability scenario. So I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.